Good morning, everybody. It is Wednesday, August the 5th, and here is what is on our agenda this morning. Tech headwinds from SpaxeX CapEx and the AMD outlook, but US futures are pointing higher. Novo Nordisk's obesity pill, they don't live up to the Wall Street hype, and Brent's below $80 as markets focus on reasons for hope around the Strait of Hormuz.
Well, Anna, it's a good vibe in the equities and futures picture this morning. Stoxx 50 futures up 0.5%, following the gains that we've already seen in the Asian session and are expecting to see on the Wall Street session. Partly it comes down to the geopolitics and oil lower off the back of the expectation that we're going to get a deal in the Middle East to reopen the Strait of Hormuz. So Brent now at $78 a barrel, down 0.8%. And of course, because the haven of choice through this conflict has been the dollar, as you would expect, the Bloomberg Dollar Spot Index a touch weaker as things stand. The countdown to the opening trade starts right now.
Welcome to the opening trade, everybody. So just gone 7 o'clock here in London this Wednesday morning. And Lizzy, you're right to emphasise the positives before we get stuck into the latest news on tech.
Always.
Because we did see the S&P, the Dow, the DAX, the S&P, the Stoxx 600, all at records during Tuesday's session. So there's the positive. We'll come back to oil and what that's doing, because that was one of the key drivers. But in terms of the tech narrative, I suppose looking forward, Nasdaq futures are pointing higher, which is notable. But we do have to just highlight a couple of negatives, and they come from SpaxeX and they come from AMD. Starting with SpaxeX then, not the underlying numbers, the revenue better than estimate, the loss not as bad as it could have been or had been anticipated, but the CapEx number more than had been expected. And in the AI part of the business, the CapEx number is 15 times bigger than it was year on year. And so despite Elon Musk and all of his optimism, there are still lots of questions to ask about where this trend goes and whether there's just a lot of CapEx very quickly for a business that yesterday we were hearing from analysts has a bit of an identity crisis.
Yeah, shares down about 7% in post-market trading. We could see even more downward pressure on the stock when you have this flood of $100 billion worth of stock on sale later on this week. But as you say, it's like beats just aren't good enough, and it's a similar story for AMD. So they came out with third quarter revenue that beat the average estimate, not every estimate, but it was enough to disappoint. So essentially AMD, the message from investors is you've got to show more rapid growth if you want to justify this valuation.
Yeah, and the sales number, that guidance, that part of the guidance just seemed to underwhelm a little bit. It's interesting, though, we talk about this underwhelming, and it did, after hours down 9%, but it was up by 7% in session. So, we have to put that in that right perspective, even within just that 24-hour period. PCs, of course, still AMD's largest market by volume, and we know that memory chips have meant that we haven't seen quite so much volume in that area. I'll add into the tech narrative what we've heard from Infineon. Is the guidance was kind of in line. Is that going to be enough in this market to impress? They are talking about power chips, and there is a hint at more positive guidance to come on the power chips side of things. And in the auto sector, they're talking about that picking up noticeably. So that's certainly a real positive. So that's the technology sector. Should we move on to pharmaceuticals?
Yeah, because we also had earnings late yesterday from Novo Nordisk, raising forecasts for the second time this year because of rosy outlooks for their obesity and diabetes drugs. But shares again falling, seemingly because the Wegovy pill just didn't live up to this hype that we've heard about it. Obviously, that pill getting so much attention when it was announced, but not having the hero effect that analysts had expected to see. So ADR's down as much as 7.2%. Again, we have to mind that stock in the European Open, but it's clearly a battle in big pharma over specifically obesity drugs.
Yes, and if it drops a few percent, that could be something that weighs on the market in Copenhagen, so we'll keep an eye on that. But yeah, analysts talking about gross margin, that missing a little bit. Jeffrey's describing these numbers as messy, which isn't going to impress. And yes, a slight miss on the oral Wegovy. And of course, it's the contrast with others in the sector. So Pfizer actually within session, so this is yesterday's story, but just for contrast, they beat and the guidance was raised. And this is all due actually to older medicines, which still have a concern around patent cliffs out to 2030. So still lots of questions about the pipeline, but still the numbers were good. On a European note, just adding in that Fresenius Medical has increased their guidance today. So for a variety of reasons, we'll keep an eye on what's going on with the pharmaceutical sector.
Yeah, because we're also looking ahead to Eli Lilly results, some looking out for a stock split. So typically that would let a company carve up shares into multiple slices so they can bring down prices without impacting the fundamentals or the valuation. at the moment, I found this stat that it's only one of 15 companies on the S&P with a share price above $1,000. So that's potentially a reason for them to do that. And, of course, we're going to look ahead to earnings from Sandoz out of Switzerland at 8:30 London time, and we'll be speaking to the CEO. We'll also hear from the Novo CEO, Mike Doustar, joining Francine Lacroix on the pulse just after 9:15 a.m. London time.
Yes, exactly. A hot office media call, which he's giving right now, and just giving updates. 1.5 million people on Wegovy pills worldwide. So that is an update on the usage. Let's talk about one of the things that underscored the optimism for risk assets in markets yesterday and looks to still be underpinning risk sentiment this morning. And that is the fact that the oil price is weaker. We are down below, well, we're now down below $79 a barrel at $78.95 on the Brent price. This is the third day in a row that we've seen this drop. And there's just a host of positive factors. We can ask lots of questions about whether this is just today's news and tomorrow things will look very different. Things can always take a more negative turn. But you've got Qatar talking about how they've prepared an agreement, an accord, and that actually that is being well received by the US and Iran. You've got Axios talking about how a deal with Iran, Oman and the US is due today. You've got Iran talking about allowing the Europeans to clear mines. The list goes on. There just do seem to be a number of more positive takes on what will develop in the Middle East.
Yeah, because President Trump had been talking this up for days, but what's important is that you're getting encouragement, it seems, from the Gulf side here. As you say, Qatar saying that proposal's drafted, and under this proposal you'd have inbound vessels using a northern lane near Iran and outbound traffic travelling through the Omani waters in coordination with Iran. So interesting to see how they're going to work this out, because of course we knew that Iran didn't really want to cede control of the strait, but it's desperately what Donald Trump needs before the midterms to get the trade back flowing. Yeah,
absolutely. And thinking about those regional tensions, we've been focused on the Red Sea as well. Interesting, our reporting suggesting that the Saudis are talking via Omani mediators, talking to the Yemeni Houthis. So we'll certainly keep an eye on that relationship. And also watching oil prices. There's some suggestion that US inventories at Cushing could have actually staged their biggest increase since March last week, which would be really quite significant ahead of the midterms. I mean, it's just 1 week of data, but in the current context, anything like that suggests that, you know, we're not quite so close to the bottom of the barrel would be something of a positive. So those are the top stories we're focused on this morning. Let's tell you about the guest conversations we're going to have during this morning's programme. We'll be speaking to Jolanda Poots-Bijl, who is the Ahold Delhaize CFO. So really interesting conversation around food prices. Of course, with El Nino in the wings, that's part of the narrative as we go into the rest of the year. Richard Saynor from Sandoz will be with us. The numbers out, as Lizzy says. We'll speak to the CEO later in the programme. Mike Bell, RBC Blue Bay Head of Market Strategy. Not too positive on European stocks, but we've touched some new highs. So what does he make of that? Emily Ashford, Standard Chartered Head of Energy Research, will be with us to talk about the Strait of Hormuz, but also talk about low river levels in parts of Europe.
Well, let's take a look at what else we're watching throughout the day as well. At 10 a.m. London time, we get Euro area PPI. 1:15 p.m. London time, it's US ADP employment data. Of course, we got the JOLTS numbers already yesterday. And then later in the day, we'll get some Fed speak from Lisa Cook, Mary Daly and Jeff Schmidt as well. On the earnings front, numbers continue from the US. Disney, Eli Lilly, Uber and Sandisk all reporting aftermarket stateside. But Uber in focus, and really interesting, the robo-taxi ambition really is going to come under scrutiny, and we've seen the shares sliding recently.
Yeah, absolutely. The stock has been underperforming the market. Did they get any kind of boost from the World Cup? I mean, that might also be a positive narrative. But yes, the big negative is the fact that they had a partnership with Waymo, but that collapsed, that fell apart. And so what does that mean for their autonomy ambitions? Such an important part of this industry, but also the food delivery side of things also important. And they've recently bid for Delivery Hero over in Germany. So we will watch that with interest. Coming up on the programme, President Trump says talks with Iran are going well as hopes rise that an interim deal to reopen the Strait of Hormuz can be achieved. We will go live to the region for the latest. Plus, sales at Chanel surged thanks to new creations from the designer Mathieu Blasi. We will discuss what it could signal for the wider luxury sector. Up next, we'll be joined by the CFO of Ahold Delhaize. Jolanda Poots-Bijl will be with us shortly. If you want to get involved in any of these conversations, IB plus BBTV Go is the function to use on the Bloomberg terminal to get in touch with us here at Bloomberg TV. This is Bloomberg.
46 minutes away from the opening trade. This is the futures picture. Euro Stoxx 50 futures up 0.4%, but it's green across the screen, across the continent. The laggard set to be the FTSE 100, but that's because of the reason that's boosting sentiment elsewhere, or at least one of those reasons. We've got lower oil prices this morning off the back of the latest developments in the Middle East. Expectations, hopes of a deal, and that the Strait of Hormuz could get back to traffic flowing. So Brent is down 0.5% at $78 a barrel, just shy of $79 a barrel. But because of the energy exposure here in London, perhaps that's what holds back the FTSE, but boosts the rest of the continent, Anna.
Let's talk about the retailing space, the grocery space here in Europe and beyond. Ahold Delhaize has released numbers this morning. Things looking pretty good in Europe, but sales have increased less than expected in the United States as the owner of Stop & Shop faced pressure to compete with rivals on price. The Dutch retailer reporting for the second quarter this morning. Joining us now is Jolanda Poots-Bijl, who is the Chief Financial Officer at Ahold Delhaize. And Jolanda, it's a pleasure to have you on the programme. Thank you so much for coming to talk to us. So broadly, you've reiterated your outlook this morning, but the margins in Europe look a little ahead of expectation, but in the United States, a little below expectation. So paint a picture of how business looks to you right now.
And thank you, Anna, and thank you for having us in your program. If I look at our quarterly results for Q2, I'm quite happy with them because we're resilient in what we would call dynamic markets. And if I look at our sales numbers, we trend at 1.9% for the group, affected by a few elements such as the Inflation Reduction Act, ag deflation, and SNAP eligibility reductions. If I compensate for that and look at that number with positive volumes attached to it and growing market shares, we look at a resilient performance in tough markets, as I would say. Referring to the margin, as you asked for, margin remains strong, 3.9% for the group. And you need to bear in mind that with this margin, we are heavily investing in our prices. As we announced in 2024, we laid out a $1 billion price investment program in the US alone. And that, of course, is reflected in both top line and in our margin profile. But the guidance is reiterated, as you stated, and we do see very positive impacts of those price investments. Let me call out Stop & Shop here. We're investing in prices in that supermarket chain. Our Net Promoter Score is now at 79, which is an all-time high, and we gained 70 basis points of market share. So what we're doing in our strategy, staying close to our customers, investing in prices, is paying off, and we look forward to continuing that trend in the second half of the year.
Okay. So you described the results then, Jolanda, as resilient, and you've given us that data there on Stop & Shop. Do you think the US, is it becoming much more competitive? You've talked about investing in prices. We heard from the Kroger CEO, Albertsons, talking about difficulties in parts of their business. Is it more competitive in the US? Do you have to invest more, therefore, in prices? What can you do?
Well, it's not that we have all the wisdom in the world, as we would say in Dutch, but 2 years ago, we already predicted for ourselves that we needed to invest in prices. So the $1 billion in the US that we announced in 2024, we're on the trajectory to deploying that program. And as I stated, if I look at our market share development in most of our markets, both in the US and in Europe, by the way, we're gaining share. So the current conclusion is that we're on the right track. But we are flexible. If we see opportunities to invest more to drive growth even more, or if the market warrants us to invest more, we will certainly do so. But we are focusing both on online and offline growth, and also our online growth in the US is growing with double-digit numbers. So for the moment, we're okay, and we continue on the trajectory that we started 2 years ago.
Well, Jolanda, does that mean that maybe you'd look at acquisition opportunities in the US?
We're always on the watch out for that, because it is important to drive our scale, both organic and inorganic. So yes, we're always analyzing the opportunities, but we're a prudent company. So we really have strict rules. There need to be a clear business case to drive those acquisitions. And as you've seen, we've invested in Profi in Europe as an acquisition and the Delhaize stores in Belgium. And we're also always mindful in the US. But if the opportunity doesn't match our criteria, we just stick to our organic growth, and we're happy with that trajectory at this point in time.
And has that Profi acquisition met your expectations so far?
Yes, they do, both in Profi in Romania, where we had a Profi attached to our Mega Image, already a local brand existing for a long time, and we now have a number 2 position in the country. We are expanding our position, opening up hundreds of stores in the coming years, and we are realizing the synergies that you need to gain from a combination like that as we speak, and that is also supporting that margin in Europe somewhat. The Delhaize acquisition only recently was closed, so at the beginning of the year. We acquired a lot of new square meters in Belgium to deploy our customer value proposition on. So too early to tell on that, but we're very happy with those 2 acquisitions.
You're happy with those acquisitions, and you've talked about being disciplined if you were to do any M&A from here. And I wonder how that rubs up against your policies, Jolanda, about returning money to shareholders. You've done, I think, for 11 years a share buyback that has been around €1 billion. Would you consider changing that at all for the right M&A opportunity, or is that are you extremely committed to continuing that 11-year path?
The word extremely is extreme, but we have committed to close to the 4-year program that we announced around Growing Together. We have also included $1 billion a year of share buybacks for that 4-year period, which ends at 2028. And there's, of course, always the disclaimer, if a huge acquisition opportunity would come up, that we would reconsider. But for the moment that we're in, we are committed. And it's an important part of our investor promise, of course. Both high single-digit growth over the 4-year periods and the share buyback is our promise to the markets.
And Jolanda, can I ask you a little more about pricing? And maybe this is a question, well, it may be in the US, maybe in Europe, wherever you think it's relevant. At the moment in Europe, of course, we have a lot of dry weather. We have drought conditions in parts of Europe, river levels very low, some farmers struggling as a result. Then looking ahead to the end of this year into next, there's a lot of focus on El Nino and what that might bring in terms of conditions for farming. What does all of that add up to around food prices and food availability?
Well, you know, we never project inflation going forward because we rely on the institutions that are more equipped to do so. But we do see that weather has more and more impact, of course, on food pricing. So what we try to do is absorb as much as those food price increases as we can. We are laser focused on our own cost, the cost that we can influence. For example, in that Growing Together period of 4 years that I refer to, we have a $5 billion cost reduction program in place, and we've over-delivered last year, and also this year we're well positioned to reach our target. So we do everything we can to absorb those costs, but yes, food pricing has become more volatile, also driven by weather volatility.
So more volatile, but will you expect to see some sort of step change in pricing as a result of these developments?
Well, we have seen quite some inflation already in the last 2 years, right? So no step changes foreseen in the near future. But like I said, very difficult to predict. If you, for example, in the US look at beef prices, they are very elevated. And it will take quite a bit to get those beef prices down. So it's something that we have to deal with in our supply chain, but not something that I would dare to predict for the coming years. What we do is we try to get into long-term contracts with our suppliers, support our suppliers where we can, and help our customers also in many ways, also with the price investments that I alluded to keep prices as affordable as possible.
Jolanda, thank you very much. Thanks for joining us. Jolanda Poots-Bijl, who's the Ahold Delhaize CFO.
Well, here's what else you need to know this morning. Artificial intelligence models developed by OpenAI and Anthropic carried out potentially harmful activity during safety testing, including trying to inject harmful code into software. The UK's AI Security Institute said that it was the first time it had seen risks around autonomy and deception manifesting so clearly in the real world. Both companies are now working with the institute to investigate the incidents. Elsewhere, Bloomberg has learned that former senior officials from European nations and Russia met last month to explore potential conditions for peace talks to end the war in Ukraine. The meeting is said to have taken place in Vienna and included former officials from the UK, France and Germany, as well as an unidentified former Kremlin official. And Bloomberg has learned that Chanel's sales rose strongly in the first half, outperforming rivals, including LVMH, helped by strong demand for Matthew Blasy's new collections. We're told comparable revenue at the private company climbed about 16%, with similar growth at the company's fashion division. The collections went on sale in March and have proved popular despite a challenging consumer and geopolitical backdrop. Well, Anna, I have to say, I've been doing some on-the-ground reporting.
That's very good of you.
I mean, it was a difficult assignment, but I bought these Chanel shoes, and the queue was round the corner on Bond Street when I went there, and Lily Allen was there shopping with her entourage. But it's real, the hype around this designer.
Yeah.
And, you know, it's managing to make the Chanel beat its competition in this market when you've got so many new creative directors out at the moment.
It is amazing the lengths you will go to bring these stories to life, Lizzy. We thank you for your sacrifice. Really interesting that also that they're not only selling well on Bond Street, it seems, but if you look at the geographical breakdown, doing well in the US and also doing well in China. And so if that's kind of the holy grail of fashion, if you're managing to serve both of those two markets. And just as we saw from Richemont, even if it might not be as core to their business, but the jewellery side of things at Chanel doing well, it seems like that kind of news backdrop, doesn't it, where people are looking at jewellery and watches for the things they want to wear, but also for the places they want to put their money and the places that might store some value. So that's part of the narrative. Should we talk about some of the other earnings that we've had out this morning? And Novo Nordisk springs to mind. We'll be watching the start of trade. Will this be one that's negative this morning? Because it does seem as if those Wegovy pills have disappointed a little bit. We've been monitoring lines coming through from the CEO this morning. He's on that media call speaking to investors, or speaking to journalists, really. He says that they found the sweet spot on the Wegovy pill pricing. So maybe that suggests that there's better times to come. They're going to launch that pill in Germany next. So those are just some of the lines coming through about Wegovy and the pill form of that particular GLP-1.
Yeah, the CEO is saying that they need some bolt-on acquisitions. 1.5 million people on the Wegovy pill worldwide at the moment. So that's the latest from the CEO, but we will hear further from him with the conversation with Francine later on in programming.
Yeah, absolutely. So Francine will be speaking to him. We'll see if it weighs on the stock. We'll see if it weighs on the overall market over in Copenhagen. I mean, not quite the heavyweight that it once was, perhaps, but still has the power to move things.
And, of course, economically, such a huge contributor to that Danish economy. But coming up on the programme, Swiss pharmaceutical Sandoz is out with earnings as well this morning. So busy in the pharma space in the last and future few hours. We'll be speaking to the CEO, Richard Saynor, to discuss the pharma industry landscape. And that conversation is coming up next. This is Bloomberg.
Welcome back. This is the opening trade, 30 minutes from the start of cash trading here in Europe. So let's put up the futures picture and see where we are this morning. We've had quite a bit of earnings news out this morning here in Europe, so we have that to factor in. We are expected to go a little bit higher, up by 0.3% on, in fact, all of the markets on that screen there. And that's not too dissimilar from what we are seeing in the US markets as well. E-minis up around 0.4%. NASDAQ futures, Lizzy, up by 0.25%. And that's despite the SpaxeX capex and the AMD sales outlook, which many have been saying, raised flags around or are worrying for those in the AI investment thesis. So we'll see what that does to the Nasdaq.
Yeah, and possibly it's because the geopolitics is outweighing those tech concerns. If we take a look at the bond space this morning, you've got yields lower across the European curve, across the continent, following the moves that we'd already seen on Treasury yields. So the 10-year Treasury yield down a basis point, the German 10-year down 2 basis points, 309 on lower oil prices. So Brent is around $79 a barrel as things stand on these hopes of a deal in the Middle East to reopen the Strait of Hormuz. Now, let's turn back to the earnings picture. Sandoz reporting second quarter net sales that met average estimates. The Swiss drug company saying that sales were driven by what it called an outstanding biosimilar performance. Well, I'm pleased to welcome now the Sandoz CEO, Richard Saynor. He joins us now. Richard, good morning to you. So, outstanding is the performance this quarter. Tell us more. What's your message to shareholders this quarter?
Well, first of all, good morning. Outstanding to me. US biosimilar grew 47%. I think that's a real standout. Overall, globally, we grew at 22% in the second quarter. And now over 33% of our revenues in the first half of the year came from biosimilars. You've got to remember, 3 years ago when I did the first capital markets, we had an ambition that about by 2030, at least 30% of our revenue would come from biosimilars. Clearly, we're well ahead of that. So really, really encouraged by our ability to bring and then take leadership positions with the biosimilars that we come to the market. So very, very proud, really, really pleased.
Great. Well, how are you thinking about the markets you operate in today then? Which markets, which regions are providing the biggest growth opportunities? Where do you see the biggest challenges?
I think we're in such an exciting time. We've described this as our golden decade. As you look forward over the next 10 years, there's something like $650 billion of product due to come off patent. And I think as the world's largest generics and biosimilars company, we're extremely well positioned to capture a significant share of that. Already today, we announced the expansion of our biosimilar pipeline from 32 now to 36 assets. We've obviously now got our approval for our first semaglutide in Brazil. There's a lot of opportunities really in many markets and in many products. So there's not one thing that really needs to happen, it's many. And then we expect that momentum really then to continue from this year into 27 and 28. And then we'll give a much stronger outlook then in terms of what that looks like later in the year when we have our Capital Markets Day.
Richard, good morning. Just sticking on the biosimilars theme then, I think, are they around a third of your revenue now? So how do you think over at Sandoz,
how do you think
about capital allocation? Yeah, how do you think about capital allocation between biosimilars and generics then, if that's where we are at this point?
Yeah, it's not an either or. I think, we talk a lot about biosimilars because clearly, it's a very strong growth driver. But also 70% of our revenue still come from generics. Generics throw off a lot of cash. They give us scale and there's a lot of opportunities. And also you're then getting into these exciting spaces like GLP-1s, which technically I would class as a small molecule, but there's a little bit of a hybrid. So there's a number of those things. So really we think about the opportunities and then split the capital between all of those, because it's important that we continue to serve and bring patients small molecule access generics as well as biologics. If you're an oncologist, you don't get up on a Monday morning and say, well, am I going to treat my patient with a biologic or a small molecule? You treat a patient. And that's really how we see our customers as well, that we want to bring a broad portfolio of products, small molecule, large molecule, and peptides to the market.
OK. And Richard, of course, the subject of tariffs has been very topical within this sector for a little while now, in particular under the current US president. How are you preparing for the possibility of higher tariffs for your products into the United States?
Look, I think it's important to take a step back. I was actually in Washington the week that the tariff announcements came out. I would say we're having very, very constructive dialogues with very senior members of the administration. And I think we need to find ways to work together to deliver the same thing. We all want the same thing. We want high quality, affordable medicines supplied to US patients from European and US platforms. And I think we're extremely well positioned. So, I see this as an opportunity to have a dialogue and then see how we can better align around this. Currently, today, for example, the US military has been buying its antibiotics from China. Clearly, that's not something that's sustainable. But the only remaining penicillin facility left in the Western world is in Austria. So again, we're having very good constructive conversations about what that could look like. How do we work together to deliver better security of supply and partner to achieve those things? So I'm extremely optimistic that we're having the right conversations.
What about Brussels policy, Richard? Because the EU's made improving resilience of critical medicines really a priority. Have you seen any concrete commitments or incentives that would make meaningful differences for your business?
Look, I think, again, what I'm encouraged by, first of all, is the access. I think I've seen pretty much most heads of government, ministers of health, economics ministers across Europe. So I think the access that we have at company is unparalleled. Everybody, to a man, has agreed that, look, sovereignty, and particularly of things like antibiotics, is critical. And then now, on the back of things like the Critical Medicines Act, the ask is very simple. We're looking really for effectively another euro or another cent on every pack of antibiotics that we sell across Europe. Today, in most markets, we sell a pack of antibiotics more cheaply than a packet of chewing gum, or in Switzerland, a packet of Ricola. So really, the ask is very simple. How do we put basically a euro per pack on everything we sell? So it's a very, very modest request. Now, part of the Critical Medicines Act requires that each member state procures at least 30% of all of their medicines from vertically integrated suppliers. So now each state, we're having the conversation, what does that mean? How do we shape tenders? How do we have the right conversations with governments? So I'm encouraged that those conversations are happening, but clearly I'd like to see more action, more momentum around that. But certainly we're seeing opportunities emerge, so I'm encouraged.
Yeah, Richard, I mean, we've talked then about the US, the pressure there around tariffs, and Lizzy was asking you about European policy. I mean, it's all of that. How do you decide where to expand manufacturing, Richard? I mean, Europe would like you to manufacture in Europe, and the United States would like you to manufacture in the United States. So how do you navigate those tricky waters?
But first of all, we navigate on the basis of the business opportunity. At our heart, we're a European company. We're listed in Switzerland. Europe is our largest region, and that's our main manufacturing footprint. We have about 15 manufacturing sites globally. We've just opened state-of-the-art biologics development facility in Slovenia, and later this year we will bring on stream state-of-the-art manufacturing capabilities also in Slovenia. So again, we've made a lot of capital investment there, and I'm open to looking at markets, whether it's in Europe or the US. Again, we need to see a way that is sustainable, that we can get a return. And I think we've come an incredibly long way in the last 3 years since we became an independent company.
And talking of tricky waters, Richard, have the recent geopolitical tensions in the Middle East changed the outlook for you, changed your sourcing strategy, changed your expectations for API pricing?
And look, I think we said earlier on at the last earnings call, we do see some inflationary pressures, particularly on APIs. Most APIs are oil-based in terms of how they're manufactured, and clearly shipping costs, whether it's aviation or sea shipping costs, have gone through. I think there's a broad reality that some of those costs will naturally get passed on to payers. But again, you've got to remember that we supply in Europe 80-90% of all the medicines dispensed for about 10% of the cost. So this is a very modest impact, but certainly we're having the conversations about how we do that. In terms of procurement, yes, we're constantly looking at whether we source from different locations, but there's a hard truth, because Europe particularly has focused on price. Most drug substance, the API as we call in the industry, active drug pharmaceutical ingredient, comes from Asia, predominantly China and India. So when you look for alternative sources, frequently there are very few choices. Now, as a company, we're investing heavily, particularly in biologics, and these are the larger, more complex drugs used in things like cancer, that those will be vertically integrated within Europe. And as I said earlier, things like anti-infectives, we're the only remaining company left in the Western world manufacturing penicillins.
And how do you think, Richard, with all of that said, how do you think about the return of cash to shareholders, the sort of distribution strategy? And if you have to step up manufacturing in the United States, does that change the distribution strategy? How do you think about that?
Not at all. We have a very clear allocation strategy in terms of our cash. I think you're seeing, again, the strong momentum. strong cash generation flowing through, and you see that on the results that we produced. And we see a strong opportunity. That we have a very strong balance sheet. We have a very modest amount of debt. We have a huge opportunity to allow us to grow and invest. And we've been very clear about the discipline around that action. So I think we're extremely well positioned. And we're unique in many ways. I don't really see many other companies, if any, having the strength and the position that we have and the leadership. As I said earlier, now we've massively expanded our biologics pipeline. When I started in this role 7 years ago, I think we had 7 biologics in our pipeline. Today, we now have 36 and growing. So I'm very excited about the momentum we're creating, but I think we're more than capable of funding it, delivering a strong return back to our shareholders.
Richard, thanks so much. Thanks for joining us. Richard Saynor, the CEO of Sandoz.
Well, energy leaders are warning about the impact of the continued closure, as we were just discussing, of the Strait of Hormuz. Take a listen.
Now, unfortunately, we're still not getting enough product through the Strait of Hormuz. Even at the highest ends, they're saying that we're getting only about 7 million barrels of oil through the Strait of Hormuz at this point. Because of new pipeline capacity, you only need to get that level up to about 11 million barrels a day through the Strait because of a lot of that product now flowing through pipelines.
Mike Summers there, President and CEO of the American Petroleum Institute, speaking to Bloomberg. And we'll have more on the energy story and the state of the Iran talks later on in the programme. Stay with us. This is Bloomberg.
We expect the cadence of AI development to improve dramatically. And then with Grok 5, which should be out before the end of this year, we will be incorporating the entire corpus of SpaxeX data. Basically, all the data that SpaxeX has ever produced, which is a tremendous amount over the course of a quarter century, will be incorporated into Grok training.
Elon Musk, the CEO of SpaxeX, of course, speaking on the company's first post-IPO earnings call. And this was while SpaxeX shares fell in after-hours trading after it reported higher than expected AI spending, dampening its debut earnings report that broadly surpassed Wall Street forecasts. Let's get some analysis now with Bloomberg senior strategist Neil Campling. I know, Neil, that Elon Musk personally commented on your analysis last night. I think you were basically saying that investor expectations were too high and he was agreeing. Why weren't investors impressed with these results?
To put it really simply, rockets burn fuel. SpaxeX burns cash. I mean, for every $1 of revenue, not even profit, they're burning $2 of cash. And that's the key problem, I think, for the company that is acting very much like a startup company, but it's now in public eyes because it's been listed. As you mentioned, on the broad metrics in terms of the quarter's results, they actually beat expectations on all 3 divisions. The problem is that the investments require significant amounts of cash. And that's a problem, I think, because they have grand ambitions. They claim that the target is to get to $1 trillion of revenue by 2030. That's going to require a lot of money to even come close to those ambitions.
I mean, Elon Musk was really positive, wasn't he? So there we are.
For a change.
That's a surprise, yes, obviously, to everybody. Talking about the cadence of AI developments, guiding revenues higher, as you say, pointing to that. Also very positive on Starship, the big rockets, the reusable rockets and what they could do there. What about AMD then? Because there we got the sales outlook underwhelming a little bit. Was that to do with AI? Was it to do with PCs, which is still such a big part of their business? What was the driver?
I think the only issue really is particularly the buy-side expectations were above where the company were forecasting to. So there's a bit of travel and arriving in the stock, for one thing, I think. And then also, if you look at performance year to date, it is the 6th biggest single stock contributor to the S&P returns this year. So it's done very well. And so the core business is doing okay, but it's just in terms of those expectations being reset.
Yeah, stock's up more than 140%, I think, yesterday, which is quite incredible. What about Infineon here in Europe then, Neil? We had these numbers out. I spoke to the CFO a little bit earlier on. I mean, he sounded pretty positive, but some of the numbers look quite close to market expectations. I'm not sure if that's good enough right now.
That's a great way of summing it in terms of good, solid results, guidance solid, but the streets are already there. So again, Infineon relative to the AI winners in Europe has performed strongly this year. So it just maybe takes a reset until it potentially can go again in terms of outperformance. But in terms of underlying metrics for AI, for data centers, for the core business, they are solid. But it's going into a fiscal fourth quarter where perhaps we need to wait for later in the year to get a bigger read on what's going on in the underlying markets.
Yeah, there was a sort of hint at a possible upgrade to guidance coming in the future down the track, but we'll play more of that interview a little bit later on in the programme. Neil, thank you very much. Thanks for joining us. Neil Campling with all things tech. Let's turn to today's markets in 3 minutes on the opening trade with Markets Live Executive Editor Mark Cudmore. Mark, we've been busy worrying negatively about what's happening with the AI trade just in the last couple of minutes, but actually let's put all that to one side because, you know, stocks at records, the S&P, the Dow, the DAX, the Stoxx 600, all at records in the past 24 hours. Is it all about the weaker oil price? Is that all it takes?
I think about 50% of the euphoria in markets this week is probably around optimism about US-Iran. And there definitely is euphoria. As you say, stocks are at records. You know, almost every asset's doing well. Bonds are rallying, which is playing into the stock story. So I'd say about 50% is US-Iran, even though we've been here before. And it's precisely because we've got deja vu about the situation of a promise of a deal that's holding some investors back, which means we still probably have even more upside if there is finally a deal which seems viable and sustainable and is actually validated on both sides. What's the other 50%? I think the other 50% really is largely just kind of technical relief that the rout in Korean stocks is over, that the situational awareness fund is kind of resolved, and then we've rolled into a new month and we can kind of put July behind us. So I think 50% is that and 50% US-Iran optimism.
So then, Mark, has the S&P turned a corner now? It's out of the narrow range it was stuck in for several months.
I mean, look, S&P 500 never went far from its record highs. Even in July turmoil, which was very much sector specific, S&P 500 has been doing fine all year. I mean, I think we remain in the inflationary stage of the AI capex bubble, and we remain in an overall very bullish environment for stocks. We've got massive fiscal injections from around the world, both from the private sector and the public sector. We're having monetary policy being held inordinately low. We keep on getting promises of relief in US-Iran, which is the one big risk out there. Earnings are incredibly strong. So the macro environment is still very, very positive. As we've discussed since about May, I think we're in this more volatile stage of the AI kind of bubble. And therefore, but that still means higher prices. So, you know, look, S&P 500, yeah, it hasn't gone much further, but it's not far off record highs, which is, you know, is extraordinary gains the last couple of years.
Mark, are we still adjusting to what we heard last week from the Fed, do you think? You think it's still working through markets, the lack of guidance that we're getting? And what is that doing, do you think, to risk assets as well as to the long end of the yield curve?
I'm not sure we're still kind of working through it, but I think that the message from that meeting is going to remain very relevant. And, you know, for the long term, one is we're going to have more volatility around data points, which is one aspect. And because we got some big data points to come this week, with jobs in particular, that's going to be interesting. And I think the second one is that because of that kind of slight surprise in how dovish war sounded in the conference relative to expectations, I think that the next data points in particular will either kind of validate that view or make it seem more like a policy mistake if the data is strong.
Mark, thanks very much. That's our Bloomberg Markets Live Executive Editor, Mark Cudmore. And remember, you can get up-to-date analysis from Mark and the team by going to MLIV Go on your terminal. Now, let's turn to the stocks to watch this morning. Chloe Melly has them for us. And Chloe, it looks like Novo indicated lower on TradeGate.
Yes, absolutely. Good morning, Lizzie. We could see Novo take a bit of a hit this morning because the sales of its weight loss pill did not manage to beat expectations. The expectations from investors were really, really high. There were high hopes that this pill would outperform, but there might be a bit of a disappointment there that could weigh on the shares. There's a lot of swing factors to consider as well when it comes to the outlook. As Bloomberg Intelligence puts it, if we flip the board, we've got this question of the Medicare coverage, the rollout of that Wegovy pill outside of the US, and then also the success potentially of Eli Lilly's rival weight loss pill. So there's a lot of factors to consider there for Novo, and we could see a bit of weakness at the open. Moving on to Heineken, which came out with a pretty solid print this morning. Its performance in Asia and Africa managed to offset the persistent weakness that we are seeing in the American and European markets, which is something that Heineken has been dealing with for quite a few quarters now. We could see this pretty solid earnings actually give a bit of a boost to the incoming CEO who's joining in October. We have seen Heineken underperform AB InBev, one of its biggest rivals in Europe, by quite a large margin. But we could see these earnings this morning to really boost those shares. So we'll be watching out for that as well. And finally, Siemens Energy is going to be in focus after targeting the top end of its guidance range, thanks to very strong demand for grid equipment and gas turbines. Of course, a big AI beneficiary. It's really benefited from that. We are seeing the shares up 25% year to date, and we could see an even bigger boost on the back of that print this morning.
Chloe, thanks very much. Chloe Melly with the latest on those stocks that could be on the move. And Lizzy, you were speaking to Siemens Energy a little bit earlier on.
Yeah, and he was saying it's not all about AI, which is really interesting because you've got this question about whether the hyperscalers are putting too much into infrastructure when efficiency could be coming down the line. And he says, electrification demand goes beyond AI.
Yeah, there's something of that dynamic at Infineon as well, talking about autos and electrification of the European economy as well. So lots to think about there as we get towards the start of the European trading day. Coming up, we'll bring you the opening trade, then futures are pointing higher for Europe. This is Bloomberg. It's Wednesday morning, just minutes away from the start of the European equity trading day. Good morning, everybody. Welcome back to the programme. And this is the handover from the US yesterday. So even if nothing had happened since, looks as if since European markets closed, where the yellow line is, the US markets drifted a little higher. And so that sets us up for something a little positive into the European session today. And in fact, in the last 24 hours, we've been up at record highs on the S&P, the Stoxx 600, the DAX, plenty of other markets besides. Part of that's an oil story, much weaker oil prices. Risk sentiment is positive. But there's also the AI dynamics as well. And I think it is interesting. If you look at the futures picture here in Europe, that's telling a positive story. We've got earnings in there, certainly, across European stocks. But also we've had, Lizzy, these earnings reports out of SpaxeX and AMD. And despite the negativity around those individual stocks, that's not knocking US futures into negative territory. And I do think that is interesting in terms of the breadth arguments around US stocks. What are you watching on the stocks to watch?
Well, on that point, Nasdaq futures are up 0.3%, but loads of earnings to bring you as well this morning. Spoilt for choice when it comes to the stocks to watch. I've picked out Novo because analysts are saying that their guidance hike is underwhelming. Jefferies saying the results are messy, even though they're noting there's an underlying beat. Then we've got Infineon on the list. They're forecasting revenue in the current quarter that beat analysts' estimates. And then we've got Glencore, profit jumping on a trading boom, record copper, but our analysts saying that the cost hikes blunt the results. They're focused on 2% EBITDA cuts, and notably the CEO saying that Glencore's taken a provision on its exposure to iron ore trader Radiant World, but that exposure not material to the company. So let's see how investors weigh up all of these numbers, Anna.
And that's an interesting big heavyweight, of course, in the London market. On Infineon, yes, some of the quarterly guidance not bad, but I wonder if overall the guidance is going to be enough to drive the stock higher today. I spoke to the CFO. He was very positive on a number of fronts, but we'll see what that means in the short term for stock market performance. Let's open up these markets then and see where we are. The FTSE 100 out of the gates and up by 0.2%, waiting for the other earnings reports to filter through these markets, waiting to see what that does. Over in Germany, we've had some of the industrial businesses reporting, so we'll watch Siemens Energy over there, Infineon in the technology space. We've also had numbers out of the luxury sector, not the listed luxury sector necessarily, but I wonder if that has an impact on what we're seeing on the CAC 40, where we have a lot of listed luxury names, of course. We'll also, as you said, Lizzy, watch Novo Nordisk and what that does to the Danish market. Is that going to be something that that knocks the Danish market a little in comparison to others this morning. So the AEX is up by 0.5%, which suggests that perhaps technology is doing pretty well. The DAX is not yet open. The FTSE 100 up by 0.4%. So what are you seeing then, Lizzy, in sectors?
Well, tech is the fourth best performing sector this morning, up 0.8%, but it's behind basic resources, retail and industrial goods and services as things stand. You've got just over half of sectors in positive territory this morning. Bottom of the basket, real estate, banks, telecoms, media down there as well. But just coming back to some of those individual names off the back of earnings that we've been flagging, Glencore up 4.5% at the moment on this profit jump, on that trading boom and record copper. Novo, as we had suggested it would be, down 1.6%. So not impressed. Investors not impressed by that guidance hike. And then we've got Next up 4.8%. They've lifted their outlook here in London. The UK hot summer boosting clothing sales for that company. Heineken was another one as well. Those shares up 1.8%. And of course, we were speaking to Ahold earlier. I'm looking out for those numbers. They're flat to the upside, so really not much movement there. Sandoz, another one though, in the drug space, up 6% this morning off the back of their numbers. We spoke to them too.
We did. We spoke to Richard Saynor, didn't we, the Sandoz CEO. I mean, Novo Nordisk down by 1%. I wonder if that's pretty good, actually, given what happened to the ADRs over in the US. They were down by much more than that, so maybe that's considered to be quite an achievement for the Novo Nordisk share price this morning. Let's take a step back and think about where we are on these markets then. Get some analysis with Mike Bell, Head of Market Strategy at RBC Blue Bay. Really nice to have you with us, Mike. Thank you for joining us. Reading through your notes ahead of our conversation, you do seem quite down on Europe, Mike. So I thought we might talk about that. And what is your view on Europe? We've heard from some other places that the earnings season's not been too bad and that's impressed. So what have you not been impressed by?
I think if I look at the short term, you've got the fact that the German and French economies are shedding jobs. So that's the kind of main concern that I have in the near term, is that the two largest economies in the region are struggling. And really, if you look at the headline data, it's being flattered by Spain. So Spain's doing okay, and Germany and France are struggling. Then if you think longer term, like, what are the problems facing Europe? I think there's two main problems. One is the rise of Chinese cars and just competing more and more with what Europe produces. And I think Europe is just really struggling to compete with China. If you look at the market share gain in Chinese cars in the UK, for example, it's gone from sort of next to nothing to almost 20% of new car sales. So that's, I think it's hard to overstate how much of a problem that is for Germany. And then the other thing is the demographics. So if you look at European banks, they've done pretty well. And the market, I think, short term thinks, well, higher interest rates is positive for banks, which of course is true in the very near term. But if I look out over the next 5 to 10 years, the working age populations in places like Germany, Italy and Spain are going to outright shrink pretty meaningfully. So I just ask, who are they going to be lending to?
Okay, so that's lots of reasons to be a bit negative, which is not quite where I meant to start the conversation, but found myself doing that anyway. So what do you prefer then, Mike, if that's not what you're looking for right now?
Well, I think, actually, when I look around the world, I think that if you want to take risk, things like high-yield debt, things like emerging market debt, probably going to give you similar returns to what you get on equities over the next 12 months, but with less downside. I just think, for that to go badly wrong, you need those companies to default on you. And I think the risk of that is relatively low. Spreads could widen, but I think they'd go down less than equities in a risk-off scenario. Whereas, as I say, some of those structural headwinds that you've got, I think affect equities potentially sooner. So I think within a risk bucket, high yield and emerging market debt with a preference to, say, European equities, but also relative to, I think, US tech stocks, which to me, there looks like there's a risk that we may be in a kind of AI bubble.
Well, going back to the negativity on Europe, you're also cautious on the pound. You talk about the risks there. I mean, are you not underestimating the fundamental strength of the UK economy, which is what so many people in the seat that you're sat in keep telling us about? Inflation only 2.6%, so many people say.
So I think the UK economy is fundamentally quite weak. If you look at the private sector labour market, pretty much all of the major private sectors are seeing a decline in employment. It's being led by retail and hospitality, and of course part of that has been because of higher taxes, particularly national insurance going up. But the problem is we're now into this negative feedback loop where retail and hospitality are shedding jobs pretty much month on month. And they are big employers. And so that then feeds through into weaker demand because you lose your jobs and then you're obviously not going to spend as much. And what concerns me is that the Bank of England have kind of got themselves into a place where they're just, it seems like almost okay with the fact that the labour market is deteriorating in the private sector. And it's being somewhat masked by the fact that education employment is picking up, that you're seeing, the public sector adding some jobs. But the private sector looks pretty weak.
OK, and then when it comes to the bond picture in the UK and the fiscal picture, how worried are you, dare I ask, about the budget on October the 28th? If John Healey, for example, leaves a razor-thin margin or less than Rachel Reeves was leaving, where does that leave gilts?
I think gilts are really tricky at the moment because you've got this fundamentally weak macro backdrop where, as I say, the labour market is deteriorating. You've obviously got falling oil prices, and the UK tends to be a relatively high beta market to that. So that would kind of argue in favour of being long gilts. And then you've got, as you say, the fiscal risk that, let's face it, I don't think this government changed tack to just continue with everything how it was. I think they're going to want to do more spending. And then the question is, well, is that fully offset by tax rises, in which case that could actually be quite growth negative in some places, particularly if you think about what it could do to house prices in some parts of the country when you combine it with where mortgage rates are. Or if it isn't fully offset by tax increases, then I think the bond market could worry about what that means for, a net fiscal easing and the sustainability on the debt trajectory. So at the moment, we prefer having positions on a UK front end, but we are considering whether the kind of 10-year part of the curve might start to look attractive on that weaker growth backdrop.
Can I ask you, Mike, about whether we are, what you're expecting from oil prices and how much of that, of our high hopes around oil prices dropping are supporting other assets? Because we have oil prices just ticking up a little bit in the last few minutes. We've had some news lines coming out of the Houthis in Yemen saying that they will target Saudi ships north of the Red Sea. This is just the latest news line. Sort of changes the dynamics a little bit because we'd had lots of positive news lines suggesting that maybe some progress could be made. That was certainly the case yesterday. Anyway, with an oil price just south of $80, do you think we have the right expectations in markets about how big a deal that is?
It's so hard to say, right? We've been kind of going to and fro on whether we're going to get a proper deal, whether oil flow is going to resume. It does look like some progress is being made, but let's face it, it's being made by essentially allowing the Iranians to potentially charge on Hormuz. I mean, the fundamental fact remains that ultimately the US doesn't seem willing to escalate because, I think quite sensibly, they realise that if they do escalate, the Iranians can strike energy assets in the region. And so their allies in the region are saying, well, hold on a second. If you do this, they're going to take out various energy assets. So, yes, it's kind of pretty fragile deal where Iran seem to have quite a lot of the power. And so the risk there is that Iran potentially come back to the table and say, well, actually, we want more, knowing that they've got this leverage. So we'll see.
So do you think, assuming we stay around 80, is that your base case assumption, or do you need to make a base case assumption? It seems very volatile prospect at the moment.
I think it's just so hard to say, but it does obviously matter if you're trying to take a view on what's going to happen to duration. Yeah, it's hard.
Let's turn to the Fed. We've got the payrolls numbers coming on Friday. How much volatility could we see around that report when, we've had the style of communications that we have from Kevin Walsh and a lack of forward guidance, actually?
Yeah, I think it's an important point. I actually think that this kind of stepping away from as regular and meaningful communication as we've had in the past is highly likely to inject further volatility into bond markets. Markets have kind of got used to, over the last however many years, having that guidance. And taking it away, it seems obvious it's going to lead to more volatility. I think about the labour market itself. It's actually in Europe and the UK, the labour market's weak. The US is the one major developed market where the labour market seems to be holding up all right. And particularly that's coming through in kind of a pickup in temp services. Interestingly, some of the sectors where you would expect AI to be leading to job losses, things like legal services, for example, are actually doing okay still. But I watch that sector level detail very carefully because obviously the medium term risk is if we start to see AI lead to net job losses, but we're not seeing it yet.
Yeah, it was interesting. Scott Bessent talking about it as a detox yesterday, wasn't he? The fact that we've got a change in the type of forward guidance we're getting from the Fed. He called that a detox for markets.
OK, well, that's one way to put it. Mike, thanks for coming in to see us. Mike Bell, Head of Market Strategy at RBC Blue Bay. Always good to see you. Well, let's look at the Core 6 this morning. Novo, top of mind, of course. And we are looking at Novo shares down 3.9% as things stand. As Anna says, maybe that's not as bad as it could have been when you look at the ADRs overnight. Off the back of the earnings, of course, the guidance hike underwhelming according to some analysts. LVMH, though, down 1.4% as well. The rest in the green. And Rheinmetall up 1.3%. In fact, industrial goods and services, one of the best performing sectors on the Euro Stock 600 this morning. Let's look at some of the individual movers at the moment. Chloe Melly has a check on what's happening. Fresenius is one of them.
Yes, good morning, Lizzy. Fresenius, a healthcare group out of Germany that makes medical devices and operates hospitals. This morning, it boosted its guidance, and this comes just after the company has really streamlined what was a massive portfolio before. And so it seems that this sort of leaner business is in great shape. And so we are seeing the shares up quite strongly this morning. We're up about 6%. Moving on to another German company that's doing very well this morning, and that is Siemens Energy. We're up almost 4% after saying that it expects to hit the top end of its guidance. Of course, it's been a big beneficiary of the AI boom through its gas turbines that are used in data centers, but also a beneficiary of this broader electrification efforts, energy transition happening in Europe. And this is the grid equipment that it provides is really participating in this particular electrification effort. So up there as well. Moving on to another positive mover, we've got Next here in the UK, lifting its guidance once again, having really benefited from the very warm weather that we've had here in the UK. This is the third time that Next has hiked his guidance this year. Has been really one of the resilient names in that UK retail sector. And so we're up almost 7% on the back of that this morning. We are also up for another London company, Glencore, which has beat estimates very strongly this morning, has benefited from this commodities trading boom, this surge in copper prices, and is also returning $3.5 billion to shareholders this year. And so that is really driving that stock this morning, up about 4%. And finally, let's end with a negative mover. We've got Infineon out of Germany down this morning. We had a strong forecast, strong results, but unfortunately when it comes to those chip makers, those AI related names, often expectations are really, really high, and so sometimes a good performance is just not quite enough. And we're down about 4.5% on the back of those earnings for Infineon.
Yeah, we'll get more from our CFO conversation with the Infineon CFO, that is a little bit later in the programme. Chloe, thank you very much. Chloe Melly with those movers. Coming up, Chanel sales said to rise by double digits, beating luxury rival LVMH. We'll discuss what it could mean for the luxury sector next. This is Bloomberg.
Welcome back to the opening trade. We're 17 minutes into today's session. This is the picture in markets. The Stoxx 600 up 0.4%. The DAX outperforming up 0.7%. The CAC 40 up 0.1%, and the FTSE 100 up 0.3%. So positivity across the screen as we're seeing around the world. US futures also pointing higher. But just in terms of the macro picture here in Europe, we've also had some data out on the Spanish PMI front. Spain's July services PMI beating expectations. 58.3 is the reading for July, and the forecast was 54.8. So still in growth territory. The composite number 56.5, gain here as well, beating the forecast of 53.5, and euro dollar up a touch off the back of these numbers. So we're trading at 115, up 7 basis points. Not a huge move, really. Anna.
Yeah, I mean, that's interesting, isn't it? A slightly mixed picture against expectations. Let's think about expectations and move on to what's happening in the pharmaceutical sector. This is the picture on the Novo Nordisk share price this morning, down by 3.6%. This after the Danish drug manufacturer raised its forecast for the second time this year. But sales of its new Wegovy weight loss pill failed to top analysts' expectations. So let's get to Sam Fazeli, Bloomberg Intelligence Global Industries Director of Research and deep knowledge on the pharma sector. Sam, thank you for joining us. So, a victim of high expectations then, Novo Nordisk here. What do we make of the latest numbers around the Wegovy pill?
Yeah, so look, this is supposed to be the pill, the product that's going to give them growth in the next few, above the numbers that people had been expecting. But let's just pull back a little bit. This is a new CEO, newish, came in, cost cuts, slashed the forecasts, kitchen sinked it, if you like. And then so now people go, okay, well, it's been kitchen sink, so I'm expecting guidance to be big. Not just 100 bips. That's where I think the problem is, why the share price is down. Because, I mean, it was on a basis of a quarter in terms of beats. You look at our MODL, lots of greens, right? Meaningful beats. So share prices react to the fact that it's not enough, as you rightly said, Anna. We need more. And if you look at the revenue growth over the next from 25 to 30, 14%. That's comparing 2030 to 2025. That's not a lot for this massive obesity market, is it?
So obviously you want more revenue, but what more do you want from the leadership? Because we've been hearing already on the media calls, Novo has no plans for major cost cuts. They're going to launch Wegovy in Germany, though.
Yeah, I mean, Germany is one of the major countries in Europe, normally for drug sales, except they've been making lots of noise about not wanting to pay anymore, wanting to cut costs, etc. So the issue that Novo has is that it needs pipeline. You need to look at the story, that 15% growth, 14% growth from here to 2030. What else is going to keep giving you an extra leg, an extra boost to that growth profile? Where are the pipeline drugs? And we've had some setbacks there. The one that was supposed to be the next big thing in the obesity side, metabolic side, was CagriSema. Didn't do so well in a head-to-head trial versus Mounjaro.
And thinking about pipeline takes me on to Pfizer, because we got the numbers out from Pfizer yesterday in session, wasn't it? So we saw the market's response. So there seemed to be quite a lot to like here, even though the market is still worried about the pipeline at Pfizer.
Yeah, because they have two big patent expiries coming up. And the only way to deal with patent expiries, if you don't have pipeline to drive through that, which AbbVie, if you remember a while ago, AbbVie had a big drug, $20 billion drug almost going off patent. They managed to grow through it, and people believed it. And that's why the share price is where it is today relative to when it was there. Pfizer, people don't believe yet. The faith isn't there yet that this pipeline is going to help them. So what are they doing? Cost cuts. They announced another extra level of $2.5 billion of cost cuts over the next 4 years.
And you're looking ahead to the Eli Lilly results. They've got their own weight loss pill. Is it Foundeo?
Foundeo, yeah.
Right. So what are you expecting from them?
Well, everyone's looking at that particular drug. So the story of Lilly has been, you need to drive that for US growth. And they've also been seeing ex-US growth from Mounjaro, which is the rest of the world, Europe, etc. So that's the one that's under focus here. Wegovy pill did okay this quarter. So that's those two are the kind of head-to-head comparators. And Foundeo has got a lot going for it, but it may be a second-half story, not a 2Q story, in that they have 2 or 3 catalysts for it to really drive growth, if it's going to happen.
Okay. Sam, thanks very much. Bloomberg Intelligence Global Industries Director of Research, Sam Fazeli. The CEO of Novo Nordisk, Mike Doustdar, is going to be speaking with Bloomberg just after 9:15 a.m. London time. So the results are out. The ADRs reacted, the stocks reacted. The media call is done, but still questions for the CEO, no doubt, and that will be on the Pulse.
Well, turning to some other numbers, some other results now. Bloomberg has learned that Chanel's sales rose strongly in the first half of the year, outperforming rivals including LVMH, helped by strong demand for Matthew Blasi's new collections. And we're told that comparable revenue at the private company climbed about 16%, with similar growth at the company's fashion division as well. Let's get to Angelina Rascouet, our Bloomberg luxury reporter in Paris, who's been diving through those numbers for us. It's rare, isn't it, that we should get these numbers at this time of year from Chanel, Angelina. So what is it that's driving sales growth for Chanel?
Yes, indeed. Hi, Lizzy. Normally, Chanel reports annual results once a year, typically in May for the previous year. But we managed to guess those numbers for the first half performance. And as you said, Chanel outperformed its peers, including LVMH. The fashion and the fashion unit, which is Chanel's biggest, it generates about 60% of revenue, rose about 16%, and that was helped, as you say, by the new collections from Mathieu Blasi. So this designer was appointed over a year ago, but his first collection started being commercialized in March this year, and they found they have proven to be very popular in an otherwise relatively morose market. But it's not just the fashion unit, because if you look at watches and fine jewelry unit, that division soared 35%. It was helped by jewelry lines like Coco Crush, and even the watch segment, which had been struggling for a while across all the major groups, rose in the first half. So that was a very positive, and all the regions grew, but obviously it was led by the US, jumping more than 25%, but even China and the Middle East in the first half rose. The outlook for the rest of the year, according to what we hear, is that the second half will probably not be as strong as the first half, because the comparison basis will become tougher. So overall, the full year growth will not be probably as high as the first half growth. But overall, a pretty impressive set of results.
Yeah, so Angelina, so growth in different geographies, part of the story here. What about the read across into others in the sector? Is there any? We've heard from others in the sector already, haven't we, Angelina, about how they've been doing? There have been some bright spots around jewellery, but other areas have struggled.
Yes, indeed, Anna. I mean, there was a note from Kepler this morning citing our scoop and basically mentioning that overall it's positive for the sector. However, it increases competition in a market that's become all about grabbing market share from other brands. So as you said, I mean, there were some groups that did really, really well, such as Richemont, the owner of Cartier and Van Cleef. Richemont posted a double-digit growth in the last quarter. LVMH and the crucial division of LVMH, which includes Christian Dior Couture, and also has a new designer. So they were appointed about the same time, Jonathan Anderson at Dior, and their collections were released sort of at the same time. So that division grew in the second quarter, but it grew only by 1%, and Dior is said to have done slightly better than the unit. But it's a very different picture when it comes to growth, if you compare. And even Hermès, which is considered one of the top and most exclusive, the leather goods unit at Hermès in the last quarter grew by about 10%, but overall the growth was about 6.7% in the quarter. So Chanel really doing better than its rivals, especially in what we call the soft luxury category. So that's fashion, accessories, etc.
Angelina, thank you very much. Angelina Rascouret for us in Paris. And we certainly see some of those luxury names under pressure in Paris this morning, which is interesting. Coming up, as hopes of a return to shipping in Hormuz gain traction, we'll talk about energy markets. This is Bloomberg. This is the opening trade, 30 minutes into today's session, this Wednesday then, and it's a positive session. We've got European earnings to layer on top of all the other dynamics in markets. We've seen quite a substantial drop in oil prices over the last 24 hours or so. That was certainly supporting risk appetite yesterday in session, pushing some of the global indexes to new record highs. We continue to see some of that this morning with earnings stories being layered on top. And despite maybe a bit of disappointment around, well, AMD's revenue outlook within the tech space, that was one of the more negative dynamics, Lizzy, around the tech story. But broadly speaking, we are positive, even if the CAC 40 under a little bit of pressure at the luxury end, actually, is underperforming just a little this morning.
Well, under the hood, Anna, there's not much volume to speak of today, as you might expect on an August Wednesday. But if you look at the balance of Euro Stoxx 600 members to the upside, it is firmly to the upside, 418 as things stand, reflecting that positive mood in equities, not just in Europe, but around the world as well. You mentioned that there are a lot of earnings stories we need to bring you this morning. So let's take a look at the leaders at the moment. We were speaking earlier to some of the Sandoz leadership, and we are up 7.7% at the moment on this company. Their results for the second quarter really in focus. The net sales meeting estimates. Glencore's profit also jumping because they've had a trading boom, record copper, so those shares up 3.8%. And next sales numbers coming out as well this morning. They've lifted their outlook, boosted by the hot summer, so that really helping clothing as well, up 6% as things stand in London. Now let's also look at the laggards, shall we? Novo has been one we've talked about a lot already today, down 3.8%. The part of this is that's been disappointing has been the Wegovy pill sales. So those shares down 3.8% as things stand. Infineon revenue beating forecasts, powering AI chip demand, powering all of that, but still the shares down 4.1%. It's hard to impress investors in this market. HSBC also down 3%. It's had multiple downgrades after that strong share price rally that we saw as well. Anna, what else do we need to know this morning?
Let's focus in on the tech sector first of all then, Lizzy. SpaxeX shares fell in after-hours trading after the company disclosed higher than expected spending on its artificial intelligence business, dampening the company's first quarterly report that broadly surpassed Wall Street forecasts. The CEO, Elon Musk, told analysts that he expects the cadence of AI development to improve dramatically and that SpaxeX would reach $100 billion in annual run rate revenue by the year's end. Artificial intelligence models developed by OpenAI and Anthropic carried out potentially harmful activity during safety testing, including trying to inject harmful code into software. The UK's AI Security Institute said it was the first time it had seen risks around autonomy and deception manifest so clearly in the real world. Both companies are now working with the Institute to investigate those incidents. Bloomberg has learned that former senior officials from European nations and Russia met last month to explore potential conditions for peace talks to end the war in Ukraine. The meeting is said to have taken place in Vienna and included former officials from the UK, France and Germany, as well as unidentified former Kremlin officials. Lizzy.
Well, the US and Iran are closing in on an interim agreement to reopen the Strait of Hormuz. The President, Donald Trump, says that Iran talks are going well and that the waterway will open very soon.
I think it'd be very smart to make a deal. We'll see what happens. They had a very good day. The negotiations were good.
Let's get the very latest now. We can go to Bloomberg's Abir Abu Omar in Dubai. Abir, how is it looking like they're going to thread this needle then? Because we know that President Trump wants the Strait of Hormuz reopened, but Iran didn't want to cede control of it. So what's the answer that seems to have been worked out here?
That's a good question, Lizzy. Good morning. So what we know is that a deal to reopen the Strait of Hormuz is imminent. President Trump there on the tarmac in LA in the early hours of our morning speaking, saying that a deal could happen in the next 48 hours. He did say that we'll see what happens. But when you ask what exactly will happen to the Strait of Hormuz, now we know that there's a lot of optimism from the U.S. side. We've heard from Marco Rubio. We've heard from Scott Bessent saying that a deal could be imminent about the reopening of the Strait of Hormuz. Now, the mechanisms of that are happening in a separate negotiation that is between Oman and Iran. And the mechanisms there reported by Axios earlier this morning. And let me run you through some of the lines that we heard there. One, what we know is that inbound vessels would use a northern lane near Iran borders, and then outbound traffic would travel through Omani waters in coordination with Iran. Axios also saying that no tolls or fees would be charged during a 60-day agreement. But Lizzy, this is all to say that this deal that everyone has been talking about over the past couple of days is really specific to the Strait of Hormuz. This is not relevant to the MOU that was signed in Switzerland back in June. All we're concerned about, or all the two sides are concerned about for the time being, is getting a trickle of movement through the Strait of Hormuz that's pretty much been paralyzed over the past couple of weeks or so since those escalations in the Middle East returned. But what we know so far from the U.S. side is that a deal could happen as soon as later today.
So that's the positive side of things, and it's that kind of narrative, Abir, that's been weighing on oil prices and bringing them back down to below, well, we were down below $79 a barrel. But then just in the last half hour or so, we've had some new threats from the Houthis over around the Red Sea, which has put some upward pressure on oil prices. What are the details there?
Yeah, so this is the Houthis spokesperson coming out moments ago, as you have mentioned, saying that ships in the northern part of the Red Sea that are Saudi flagged will be attacked. And so you're seeing the risk emerging in another waterway that's been seeing those escalations again over the past 3 or so weeks, Anna. And this is a parallel fight, right? This is the fight between Saudi Arabia and the Iran-backed Houthis in Yemen that is putting the Red Sea, that is putting Bab el-Mandeb, another key waterway, another key path that Saudi Arabia has been using over the course of this war at risk. Now, we did report yesterday, Anna, that Saudi Arabia is seeking a path to diplomacy or a return to diplomacy. Bloomberg reported, citing sources, that Saudi Arabia is asking Oman is mediating between Saudi and Houthis, apparently, to get them to return to a state of talks to de-escalate the situation that has emerged in the Red Sea. But as you mentioned, and as we just saw moments ago, the Houthis not biting and attacking or threatening to attack ships in the other pathway of the Red Sea. So while we're seeing positive news in the Strait of Hormuz, or possible positive news coming out later today in the Strait of Hormuz, we're seeing another vital waterway that is prone to the risk of getting attacked by the Houthis, backed by Iran, of course. And you're seeing oil again above $80 on the barrel, when it was below that in the early hours of our morning, at least.
Okay, Abir, a developing story. Thank you so much for the latest. Abir Abu Omar there. Well, let's get more on how this translates to the energy price picture then. We're joined by Emily Ashford, Head of Energy Strategy at Standard Chartered Bank. Emily, good to have you on the programme. Thanks for making time. I wonder how much the Iran war premium embedded in Brent would unwind further if we get, hopefully, a credible deal here, and how much lower Brent realistically could go if the Strait of Hormuz reopens. Good morning.
Good morning. Yeah, we seem to have had diplomacy gaining momentum over the past 24 hours or so, with this raft of positive headlines suggesting that we have some tentative steps towards de-escalation, at least while further negotiations on some of the more complex issues take place. But as your colleague said, the key factor is obviously the opening of the Strait of Hormuz for transit once more, and that still appears to be highly contentious, with no resolution at all, and the security situation remains fragile. Iran seems willing to open if it can collect transit fees and if it has guarantees against future attacks, sees an end of the US naval blockade and relief from sanctions, whilst the US and the Gulf states are demanding that the strait is open first, alongside guarantees for the safety of shipping and regional security. And so it's not quite clear yet if there's going to be an accord. So at the moment, the path of least resistance, at least since the start of August, has been down. We've seen sideways trading, but punctuated by sharp corrections on these headlines, even if the true status on the negotiations remains muddy. But I think there is still some hope that even though the long-term diplomatic resolution, including those complex topics such as Iran's nuclear program, still remains distant, near-term moves may in fact encourage some of the flow of products and some of the transit through the key maritime choke points. That will be safe even if we only temporarily see maybe a standing down of some of Iran's regional proxies. And the comments from the Houthis today certainly goes against that narrative. But I think the market's hoping that we see maybe just a short-term pressure release valve. But in my view, in the longer term, the pace of normalization is still going to take a long time, and some optimism, like we saw following the first MOU, could be a little bit premature.
Well, part of that, of course, is going to come down to demining the Strait of Hormuz. We've had diplomats telling Bloomberg that Iran might be willing to have European nations help with those efforts. Do you believe that, when, previously Iran has been so against foreign nations getting involved with demining?
Yeah, it's not yet clear who would be tackling the mine clearance. It seems like a one small point. I've always said that it's not necessarily a determining whether the strait is open or closed, but it's a determination by a shipper or by an insurance company as if it's safe to transit. So if there is a level of mine clearance required for the Strait of Hormuz to move forward with these negotiations, then yeah, that certainly has to be one of the key topics that gets tackled.
Emily, good morning. I want to ask about a different subject and to take our conversation a little wider because clearly we're going through a heat wave here in Europe. It's really dry and lots of people talking about El Nino and what that will mean later in the year and into next. And I wonder, focusing on the Panama Canal, talk us through what it means for your world, for the energy world, if we do see difficulties with the Panama Canal, reduced passage through that body of water.
Yeah, it's just one more pressure point on some of the key maritime choke points in the world, which shows that it's not only politics that can affect this, but it's also weather. And transit through the Panama Canal has been reduced because of the draft conditions there. Panama, not quite as critical in terms of the near-term energy market, but I said just adds another level of pressure that to a market that's already struggling with reduced crude oil supply disruptions to shipping routes and increasingly complex supply chains.
And what is it that worries you most in Europe then, Emily? We're looking at the Rhine, the Danube, and water levels are reduced there. We're looking at nuclear power facilities, particularly in Eastern Europe, in some cases having to be stood down as a result of a lack of water for cooling.
Yeah, extraordinary heat and drought conditions across Europe. Weather has always mattered to the energy complex. It influences fuel demand, but increasingly extreme heat and drought affect refiners' ability to produce fuels efficiently. So we have simultaneous raising of demand and constraint in supply. Each individual effect is relatively small, but when you combine them, that amplifies pressure. And we've particularly seen that on middle distillate cracks and boosting of refinery margins over the summer months. The ICE gas oil Brent crack, that reflects European diesel, pushed over $75 at the end of July, a near 20-year high. And there is still further upside possible there if conditions worsen. And Europe is a particularly interesting case for this because most European refineries were designed decades ago for significantly cooler climates. And the limiting factor isn't the distillate column itself, but it's the cooling systems. As we see ambient temperatures increasing, air coolers become less effective. Cooling water sources, like you mentioned, such as the rivers, they warm, so they remove less heat. And there's an increasing risk of refiners breaching water discharge temperature limits. And we have operational safety limits, which can reduce runs, taking processing units offline. Water level, as I mentioned, is particularly key. The Danube has fallen to record low levels. The Rhine isn't far behind. As you mentioned, in Hungary, we've had cuts to nuclear power generation. And in Romania, just this week, we saw these astonishing images of authorities blasting a rock outcrop and building a temporary dam to divert some more of that Danube water to the nuclear complex. Low water levels also affect inland logistics. They cause navigational constraints. Barges are forced to carry smaller loads. Cost rise. Deliveries of crude become less efficient. So then physical distribution is constrained, even if we still see refinery productions intact. So for this summer, weather is compounding an already extremely challenging market for refined products.
And potentially adding to the stagflation risk on the economic front as well. Emily, really great to get your insights this morning. Thanks so much for joining us. That's Emily Ashford, Head of Energy Research at Standard Chartered Bank.
Coming up on the programme, highlights from my conversation with the Infineon CFO, Sven Schneider, as the German chipmaker profits from rising demand for its data-centred chips. A recovery in autos also being talked about, but where's the guidance uplift? We'll get to that conversation next. This is Bloomberg.
Welcome back to the opening trade. 48 minutes into today's session, and it is green across the screen for European stocks. The Stoxx 600 up 0.25%, despite the fact that in the past hour we have seen Brent going positive. So we're up 1% nearly for oil at $80.11 the barrel. We're factoring in the latest lines around the Houthis, but it seems like the geopolitical development of maybe a deal when it comes to the Iran war is overshadowing that and boosting sentiment. But it's not all about the geopolitics, Anna, this morning. It's also about the earnings story.
It is also about the earnings story. Interesting that US futures are just coming off a little bit earlier highs. But let's go to the earnings story here in Europe. We saw an upgrade to guidance from Infineon for the full year, but that really just took the company's expectations to where the market already was. So I wondered whether this was going to be enough to impress investors this morning. Earlier, I asked Infineon's CFO, Sven Schneider, how he expected investors to react to the guidance.
On the back of a record quarter Q3 in terms of revenue, we are expecting a steep, much stronger than seasonal final quarter. We expect a growth of 13% quarter over quarter, 19% year over year to 4.7 billion. And we expect as a follow-up of that, of course, a very strong follow through in the margin trend. So 400 basis points up to 23%. And that then, as you said, brings us to a full year guidance, which is, especially in terms of the revenue, probably slightly ahead of expectations. So I would summarize it as we are exiting the year on a very, very strong path, and it's a broader based recovery which stands behind the numbers. So it's AI driven, clearly, as the number one growth driver, but there is more than that. For example, also a very strong momentum in the automotive industry.
Yes, and I'll come to that in just a moment, Sven. Can I ask you about the power chips segment? How important is the power chip segment to you and your growth story? You describe it this morning as the most important growth driver. So how big can that become?
Yeah, and indeed, I think our CEO said it a couple of months ago, I think very well. It is the biggest growth driver in the history of Infineon. The magnitude of the business, to put into perspective, is give or take 10% of our group revenues this year in AI data center, so more than 1.6 billion, doubling from last year. On top of that, there is 500 million of non-AI related data center business. So it's more than 2 if you add it together. And we expect a very steep growth. For us, it's powering AI from grid to core, including the power infrastructure. And we have already given a guidance, which is pretty rare, for the next year, which stands at 2.5 billion plus as AI data center revenues. So this is a very strong growth driver. And I do not want to give now out a new number for 27. We will do that in the full year guidance in November. But I can tell you today the plus behind the 2.5 will be material. So it is continuing to be a very, very strong growth driver. And it's not only growth driver, it's also the profitability driver. This business sits in our PS division, Power Systems division, and there is an increase quarter over quarter of give or take 400 to 500 basis points, most of that related to AI.
Okay, and you mentioned the autos sector, Sven, and the positivity there. Are you really seeing a pickup in the auto space? Is this a sector at an inflection point? What does your business tell us about the auto sector?
Yeah, Anna, that's an important question. So automotive for us is give or take close to 50% of our revenue. So it's very important. And we get very often the question, how can you grow if the number of cars being produced globally is flattish or is even going down? And again, this year we grow in automotive. Why is that possible? There are 2 or 3 important drivers. The first important driver is, even if you have whatever 91 million cars globally, the content per car goes up and up. First driver was electrification. Now it's this trend to software-defined vehicles, where we did an important acquisition last year, where we bought the Ethernet solutions of Marvell to have an even better offering. And that drives the content growth, number one. Number 2 is, there was a very, very low inventory level at the tier 1s and automotive customers. We have raised it a couple of times in a friendly way, but just to make our customers aware that there may be times of allocation, again, given that the AI customer demand on power products is so strong. And we see now a kind of replenishment of the orders on top. And there are also some business areas where we see nice market share gains, for example, the microcontrollers. So all that leads up to a good growth story in automotive, even in that overall more challenging environment.
That was the Infineon CFO, Sven Schneider, speaking to me earlier. I thought there was a hidden upgrade to guidance in there, but the market not seeming to listen, and the share price then, Lizzy, down by just over 4%.
Well, let's take a look at the broader market, shall we? We can bring in Skylar Montgomery-Koning from the Bloomberg Markets Live team. And Skylar, I'm looking at NASDAQ futures pairing some of their earlier gains, flirting with going negative as things stand. But we're still very much green for European equities, and it was green in the Asian session. How much does the geopolitics matter for equities compared to earnings when, the question is, do we get a deal within this 48-hour window that Trump has set out?
Yeah, I mean, absolutely watching for whether or not we get a deal, and that can be a positive catalyst for equities. But I also think there's a higher bar for energy prices and commodities more broadly to matter, and that's because we've had earnings season. It's a very positive fundamental backdrop in that it was very strong for both the US and Europe. We've gotten the bulk of it so far. You've had sales rise, growth rise, positive surprises, and the worry particularly for Europe heading into the season was commodities would be a drag on those margins. And so the fact that it hasn't means that you need, significantly higher commodity prices or higher yields to really be worried about. What I'll also say is we've had a positioning washout in July. The last week in July, Citadel reports that retail selling was the most retail selling since 2022. So that's a big positioning washout, and that can be rebuilt, particularly when AI has gotten more oomph behind it because fundamentals are positive too.
And what are we watching on the yield story around Treasuries in particular? In the wake of all that we've heard about what the Treasury is doing with Japan, what are you anticipating on Treasuries?
Yeah, I mean, it helps a little bit that you have lower oil prices, but I think the story is really to do with the Fed and the fact that you have this idea of a higher neutral rate in the U.S., a higher term premium is needed globally, and so the bias still very much is for higher yields. And I think it's a really important part of the yen story that we know those two are linked now, because the idea is if we get higher yields and a weaker yen at the same time, you could see the U.S. come in a more convincing way to support the yen, because what they've done so far hasn't convinced the market, because it's not that they want dollar yen to be lower, it's that they want yields to be lower. And so if you see that situation get worse from a yield perspective, you could see them come in on dollars, and that would be very different from a market perspective in terms of support for the yen.
Okay, Skylar, thank you very much. Thanks for the thoughts this morning. Skylar Montgomery-Koning from our Markets Live team. Lizzy, we have European equity markets then pricing in quite a lot of optimism, it would seem, but US futures, as you were saying earlier, just taking a bit of a leg down. We'll watch NASDAQ futures in particular as we head to the pulse. This is Bloomberg.